Well, hello, folks. I'm LA Little, and this is your daily NeoTA Wrap. Where we take a look at these markets. We do it each day, 4 times a week. We're looking for one question to be answered, and that is, what happened today, and what does it tell us about the coming ones? As I said, do it 4 times a week, Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel LA Little. If you subscribe, then anytime I push content, you'll get notified, and that's just a little button on your YouTube up here in the right-hand side, subscribe. As far as what happened today, it was an interesting day, and actually a reversal to some degree, and we'll look at that here in a second. But you ended up slightly higher on the Dow, slightly down elsewhere. It comes kind of sideways. Russell's down a little bit more than the others, but no huge decline or rally like we've seen 3 out of the last 4 days, where we're seeing like 50 plus S&P points on a daily basis. But if you look underneath the covers here, and I'll show you in a second, it looks to me like we're set up to try and pull back again tomorrow, so we'll look at that. Bonds came off a little bit today. The oil and natural gas got hit again, 2.5%. These things are trading down towards that $40 price point, and at this point, it's looking pretty serious. I mean, if you start breaking 40, I think they were at 42 today on the West Texas Intermediate. If you start breaking 40, you get down into the 30s, it's going to get a lot of attention. As a matter of fact, we're already at lower lows. If we look at the USO, and we can do that in a sec, what you're going to see is these things just keep making lower lows. There's just, it's kind of an endless, bottomless pit here, and they just keep drifting down lower, and that's putting pressure, or that pressure that's being put on oil is being put on commodities in general. You see gold back down today after a big spike yesterday, and if you watch those videos like I just talked about, you'll see a trade setup that I was talking about in gold that you can take a look at. Let's move on. Let's take a look at the indexes. Let's try to decipher what's being told to us. I'm going to start with the S&Ps, and what you're going to see tonight, you're going to see it here, you're going to see it everywhere, and that is that you do over-unders on almost anything you look at tonight. So yesterday you got hammer reversals on almost anything you looked at, and those hammer reversals had volume. So what do you do tonight? Well, you go over the top, back underneath it. That's a reversal. Now, it's not a 2-bar because it's not that extended, but a lot of times that is a little signal, right? That's one of the signals I watch for that tells you that, hey, this thing can come back in some more. Where can it come into? Well, if you start lining them up, right, you go right back to these lows and you line up these bars and you say, if you start getting into this big bar where all the volume is, and you stay into it, and it hasn't yet, then you're going to try to reach the other side, and that would be what I'd be looking for. But let's see if it gets into it. Tomorrow's Friday. It's a make or break kind of time for the week. So far, if you pull the weeklies over, and let me grab that for you. So far, the weeklies are holding, and they were in danger once more of breaking this swing point low, but so far it's held. 2067.93 is the number. You're sitting comfortably above it, but if you get another one of those wild days where we start heading down again and break it, that's going to be some news for the weekend. So let's see how it plays out. NASDAQ, same thing, over, under, less volume. That says, good chance you can pull back. Same thing here on the NDX. And if you go over and look at the Russell, over, under, back, no volume. So pretty much across the board. I didn't look at the Dow, but the Dow did the same thing. Pretty much across the board on the indexes. If you go overseas now, it's slightly different and not as negative, but there are some subtle signs there that they're going to try to pull back as well. I'll start with the one that shows that, which is the DAX. So if you look at the DAX just gets over yesterday, less volume. You just had a big spill down. You just get over the top, less volume, right? That sets up the potential now for an ABCD structure to the downside on this index. So what would it take to fulfill it? Well, it just takes a break, right? And that's a big one. It takes you back underneath these lows. So DAX is setting up to try and come back. Now the CAC itself, the French, did not. That's just an inside day. You didn't get to the highs. We got the rollover in Brazil we were talking about. That one actually rolls and continues. If I look at India, India is also trying to roll. Right, it's down here, going to test those lows and try to break them out tomorrow. If we move over to Asia, we got Hong Kong. Hong Kong, 2 days now, they're hanging down here. That's not a good sign, right? They're hanging into this bar. And so if you're going to hang in that bar and you can't get out of it, you're going to try to seek the other side. So now Hong Kong really is starting to look pretty dangerous to me. Now it was an inside day today, so it didn't tell us anything, but tomorrow should give the clue. Juxtaposed to that is the actual Shanghai index. Shanghai is kind of doing one of those cup and handle things that my good friend Charles Kirk likes to trade. So that's bullish, of course, but to me it's really not the cup and handle, it's the breakdown bar. I mean, this is the bar that broke it down, right? That's where the volume expanded again on the downside. That was after you rose off the lows, couldn't finish an ABCD structure on the upside. You have all this you're coming back into, which is a lot of selling pressure. You break down, now you're coming back up to test again. When I see something like that, it's the breakdown bar I'm going to look at. You got a previous little high here. That's the key area to me. That's where I would be looking and saying, okay, can you get back over that? Will the buyers pay up, right, to get back in up here? That's what you want to know. And if they do, they're going to try to drive it higher. So that's the Shanghai, and even though I'm paying more attention to Hong Kong, you still got to look at all the markets, even the ones that tend to be manipulated, shall we say, a little bit more than the others right now. Let's go back to our markets. Let's go to the sectors, and because we've got, at this point, we have looked at Asia mixed, Europe mixed, US is sideways to down probably on the indexes. Is there anything the sectors tell us? Well, what you're going to see here on a lot of these is the same story. You're going to have an over under, you're going to have less volume. And you got it on the IBB, you got it on actually the SOX was an inside day, as was the XLB, XLE. Here's the XLI. This one was an over-under. The XLK was an over-under. You had it on the XLV, right, over-under. So all of those set up the same way. The two that bucked the trend today was discretionary off the retail sales. That one pushed higher and stayed higher. And the financials did the same thing, right, getting over and then staying up there. So a little mixed on the sectors, but the preponderance of evidence here also pointing to something to the downside. Now, one of the things I want to point out here is a credit spread. One of the members of TA Today, we have a teach and trade room. He's in there with me all the day, usually. And he's been watching this credit spread. And essentially, this comes out of St. Louis Federal Reserve. It's their database. And they look at, a ratio here, this option adjusted spread. And they look at it and they say, hey, as the spreads between what's safe and what's risky spread, that spread becomes larger, that's telling you that things are getting a lot more shaky, and at some point, right, that can cause a recession, or it doesn't cause a recession, but it coincides with the recession. And so these gray areas are the recessions. If you look at the numbers just in terms of absolute numbers, the recession kicked in here on this one around 7.5. It officially started on this one around 6% actually, about 6%. So the spread difference between them was about 6. Here it was about 7. I'm going to pull this over so that we can see just slightly, so we can see the rest of the data. And so if I slide it over so we can see, the current data, you had a peak back here at about 5, and let me get the exact top there. It looks like it's this one, so 5.21. But now you're at 5.79. You're starting to see it come up again, and you're seeing it. If you were to draw, the lines and say, okay, is it getting higher? Well, it is. It's just slightly over it now. So you're starting to peak over the top on this spread, meaning it's trying to rise, right? We're trying to see more risk in, the high yield stuff. And that ratio is starting to increase. That's what we've seen before. If you take those absolute numbers, you're in the ballpark now. So, I don't know that this is going to be a leading indicator, but certainly it is an indicator and something that, he keeps bringing to our attention, and, bless him for it, because it's something to be advised that we should be watching. And if you didn't read this article, I would suggest you come over and take a look at it. I don't turn bearish very often. Matter of fact, I try to make a point not to turn bearish because the markets go up most of the time. But I think the preponderance of evidence is starting to suggest that there's more and more risk in this market. And I've alluded to that of late with you. I've certainly told members that for a while now. And, I wrote an article. I think it's worth reading. You can read it here, or you can go over to Market Watch if you want. It prints there first. And, take a look at it. You can see what I'm thinking and what I'm concerned about. And we'll see, if it matters or not. Because so far, everything in this Teflon market, hasn't mattered. And it has found a way each and every time just to continue higher. Right now, you've got some big sectors pacing these gains. And those sectors, financials, some of the others, but financials, we can go through them. It's financials, healthcare, and consumer discretionary mainly, and some technology. But you can't carry it forever. At some point, the rest of the market has to pick it up and see some rotation and some extra buying and things that are beaten down, or eventually those buyers are going to disappear. Tomorrow, I'm thinking probably some sort of a pullback. It's not a high probability trade, but there is enough evidence to suggest that. If this thing does start to tank tomorrow, look out next week. Have yourself a great one, folks. Thanks for joining me. As always, I ask you, tell a friend or tell two. I'm LA. This is, and it was, your daily NeoTA Wrap. I'll see you Sunday. Have a great one, and we'll do the weekly then. Take care. Good night.